Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing. So essentially hedge funds and the biggest speculators in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical support and demand area for this market. In fact, we can notice how from here multiple rejections to the upside have been created every single time that the market tested its zone. And at the moment we can see how the market is testing the exact same area, has already rejected it to the upside. And from here we could expect more bullish continuation to be created away from this historical support and demand area. If we zoom in at the most recent price action, we can also notice that the pattern that the market has currently been creating is that of an inverted head and shoulders. We can see the left shoulder here, the head here, and the right shoulder here. So there is the possibility for the market to complete this monthly impulse correction and impulse pattern to the upside, rejecting the historical support and demand and creating this inverted head and shoulders. We can also notice that from a strictly structure and price action and pattern perspective, we have an impulse and correction. And when you have an impulse and correction anyway, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements lining up exactly inside of this area, therefore creating a confluence of support inside of this zone. And when you have a confluence of support area, so multiple levels of support lining up in the same area of price, you have increased probabilities of getting more institutional longing, which at that point would further increase the probabilities of a potential push higher away from this zone. And institutional longing is something that we will be speaking about later on when we look at the order flow. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, there is one pattern which is currently very clear. The market, in creating this move to the downside, has created this weekly M pattern. And in general, after the creation of an M pattern, what you would expect is a potential rejection to the upside, completing the M pattern at the neckline. So from a weekly perspective, there is definitely the possibility to see a potential push higher, completing this M pattern at the neckline. And the neckline in this case would be exactly this area. So the previous support term resistance here from a daily standpoint. If we look also at the structure here, so the horizontal structure, we can notice how this area is a quite key zone for this market, acting as previous resistance here, turned support here, and now currently once again acting as support here, from which there is a possibility of seeing a potential rejection to the upside, which at that point would also complete the M pattern that we have just identified here on the weekly time frame. Dropping down on the daily time frame, what do we see? Well, from a daily perspective, we can see how we have seen a creation of lower lows and lower highs. This means that, at least at the moment, this market is still in a bearish trend from a structure perspective on the daily time frame. And I also spoke about EURUSD just a few days ago when the market was here, explaining all the reasons for which we could expect first this push lower and then a rejection to the upside. And in fact, that is exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, Continuing with the analysis, before we go deeper into the technicals here from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders, specifically so what hedge funds and the big players in the market are doing on the euro. The first thing to keep in mind is that if we're checking the data at the euro, we're actually already looking at euro USD because all currencies on the spot are traded against the USD. And what we can see is that net positions with the last reports have been decreased. We went from 88.7k to 62.1k. So we have seen a decrease of the net positions. However, at the same time, we can see how longs are already starting to get added. So even though clearly institutions have been shorting, and in fact, the price has been trending lower. First, institutions were closing their longs. Now they're starting to open them once again. So it seems like a rejection to the upside is quite imminent. And there is definitely the possibility that if we get a break of structure on daily time frame, we could see that rejection to the upside. So keeping in mind that institutions have now started longing once again, let's move back to the technical side. Now, from a technical perspective, the structure that we must identify is this one here. This area is previous daily support here from which this move to the upside was created, which has now turned resistance here. And until the market will remain below this area, it will continue acting as resistance. So only if we get a break above that zone, only at that point, this previous resistance will become support. So if we get a break on the retest of the previous resistance turn support, this is where we have good probabilities of getting more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from that zone. So until the market will remain below this resistance, it can easily continue lower. However, if we get this break above on the retest of the previous resistance turn support, this is where we would have good probabilities of getting a potential rejection to the upside. So if we get this break and retest, what I would expect in a situation like this. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to an intraday bullish market, at that point, I wouldn't be surprised to see a break higher for the market to complete at that point a daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.